All right, welcome back to the program. Global markets are holding their breath and all eyes are on the United States as they await the rate decision to be made. And of course, everything is flawed at the moment in anticipation. Sandiswa, welcome to the program. Sandiswa is the Treasury dealer from Nedbank Eswatini's Treasury Department. Is going to help us understand how the rate decision is affecting all the global markets. And indeed, they are all in anticipation. I want us to start by just understanding what the rate decision is and how it's affecting everything.
Yes. Thank you, Sfisa. Good afternoon to you and good afternoon to your viewers. As you have rightfully mentioned, we have a very important interest rate decision this afternoon. Mm-hmm. This is the last for the year, and in the commentary, in that presentation by the Fed, we are also looking to see signals and clues towards what's going to be the package from the Fed next year. So we are sort of trying to have portfolio managers position themselves for next year. So we'll have to understand what's the posture from the Fed perspective. But currently what's happening is that the markets are pricing in a 25 basis points cut. So there's a 90% chance of that. If that does not materialize, we're going to see a big jump or a big reaction from the markets, because this is something that's already priced in.
Okay, let's get to it now. We'll just go through gold, then we'll go commodities and then equities, because everything's affected by the rate decision. Let's get through it. Let's start with gold.
So in terms of gold, gold is up currently. This is because investors are currently moving their funds from interest-bearing assets to gold. And some of this we can see on currencies, in the sense that investors are also moving their funds to emerging economies like South Africa, Malaysia. So from a South African perspective, the rand is getting a high demand. So we also have crude, which is currently down. And this is not necessarily based on the interest rate cut, but mostly coming from oversupply of oil. So we have seen OPEC ramping up their production of oil. The US is also having record highs in terms of their production. So the market is flooded with oil, whereas we have markets like Europe and China having a slight drop in their demand, so that have dropped the price of oil. But from just to go back to currencies, we have seen the rand strengthen a little bit over the past few days. Like I've already just mentioned, that's because of capital inflow from outside investors into the country, and this is also because in anticipation of the rate cut, the South African interest rates are more attractive now because they remain higher. So investors are moving their funds into the market. And there's also a trend. This happens every December, January, early Jan. They call it the Christmas trend, but it's linked to the fact that a lot of exporting industries are currently converting their funds, especially if it's in US dollars, euros, they're converting it to ZAR for end of year reporting. So now that raises the demand of the rand, and then it leads to the strength that we currently observe in the market. So, but maybe just to highlight, this presents a big opportunity for import clients in the market to import. If you want to buy something, this is the cheapest, or this is the right time to do that.
And then as we move to equities, what are we seeing there? Well, of course, the conversation around the AI bubble, premised with the juxtaposition of course, the rate decision. I'm sure there's a lot going on there.
Yes, so there's a lot of caution in equities, and mostly it's because we have this anticipation of the rate decision. It's more than just the rate decision. Mostly the effect will be coming from the posturing of the Fed. So that's why the commentary relayed to the public by the Fed chair will be very important to see what will be coming in beginning of 2026 and going forward. So currently we are seeing a reserved activity in the market. There's a bit of being conservative in terms of traders. So S&P, FTSE and JSE All-Share are all down. But this is not a surprise in anticipation of later movements. But from the S&P 500 perspective, there's also that aspect of the AI bubble. We have seen a commentary from Bill Gates earlier today, where he was just alluding to the fact that we have AI companies that are currently valued very high, and some of these companies will not stand the long term. So though from that perspective, it's a bubble, but we also have companies that are going to withstand the test of time, and they will remain in the market. And from that perspective, investors should be looking to invest on those.
I wonder which ones those are the ones that will not stand the test of time, because I have a bit of an assignment to go do some reading there. But an interesting insight from Sandy Sodla, Treasury sales dealer from Nedbank Eswatini, a moment that has kept trading floors unusually quiet with the rate decision, but also with the S&P 500 there, the conversation around the AI bubble as pronounced by Bill Gates. We've come to the end of today's episode. Thank you for staying with us. We hope that you enjoy the rest of your day. Have a good bye. Bye-bye.
Make better money choices. Choose a bank that takes your money seriously.